What is up, you guys? Happy Monday. Just kind of checking on the markets. Dude, I thought we'd have a little bit more movement, but other than shop is on a tear this morning too. Let me see. I'll hop in. What's up, Orca? See a couple of the guys hop in and give everybody just a minute too, by the way. I actually, while we do that, I have something a little special today. We are going to run our first ever giveaway, by the way. So we've never actually done this, but we're about to hit 10K followers on Twitter. So, yep, today I'm going to send out a post. If you guys don't follow, follow the profile. It's at Paper Gains Inc. on Twitter, Instagram, etc. But we're going to give away like major stuff. So pretty cool. Excited to see that and appreciate everybody's support. It's been a long road for us. All right. Well, let's see. We got a couple people hopping in right now. I'm about to get ready and start off this deal. So if you're new here, by the way, welcome. If this is your first time seeing this, we do this every Monday, right around the lunch hour. Typically, I try to wait till everything's died down because I do trade for a living too. It doesn't always work out, but for the most part, this is going to be where most of the trades are kind of closing or coming to an end more often than not. And I don't do my setups and stuff on Sundays. Every time I do that, I kind of get screwed Monday morning when everything hits my targets and we're ready, or hits my stops either way. So, but this week we have a huge week. So we have we've had a few weeks of like nothing from an economic perspective, but we do not have the pleasure of a slow week this week. So without waiting any much longer, let's go ahead and get to it. So big giant week. So we've had inflation. It's all about the Fed. This Wednesday we get the actual Fed decision, and we have it's FOMC day. So we'll have a meeting and a decision. And if you're looking to trade FOMC moves in the market, I'll just say this: they're very tradable. The first move, 90% of the time, is a fake move. So we don't tend to follow that. But the one caveat I would have in this instance is that I don't know if we're gonna get the volume or the move that a lot of people might be expecting. Oddly enough, the last few FOMC days, they really haven't been that great, right? The last few FOMC sessions, really. It used to be a big time market mover. I will say right now, honestly, looking across the markets, most of it looks like it's already priced in. So I'm not so sure I'm going to be expecting anything major this time. But you never know. We'll be around. I will start to flatten out most of my positions before we get there, just in case, because I don't want to have too much exposure on the board. But anyways, let's take a look at the rest of this week. So every time we do this Monday morning, we're going to go through. I'm going to look at what are the major headlines of last week. What do we need to watch out for coming forward this week in terms of market moving events, or maybe some news, some headlines like that might affect some stocks that we're looking at, and just overall sentiment. So number one, the rate hike is there's no rate hike priced in. It's about an 80% chance, 70 or 80% probability that we do not get a rate hike this coming Wednesday. And I think that's highly probable. And if we get exactly what the market's expecting, I don't expect to see a huge move. That's the thing. It's always going to come down to his commentary. So it's going to be, is it a dovish skip or a hawkish pause? I don't really know. They started to say skip in the media a lot more than actually saying pause. And there's two different kind of connotations, right? Like if they say skip, well, then they're still able to hold back that, we might raise later on, the next session. And there is actually, we'll take a look at the Fed Watch tool. There is a decent probability that there will be a hike on the next FOMC meeting, not this one, but next month in July. But what's different right now is that there are no more rate cuts, expected for the rest of this year. And that's actually a little bit different. So if there was one thing that would be kind of like looming in terms of the rates that might spook the markets just a little bit, I'd say it's that there's no cuts priced in this year. And if that story changes based on Jay Powell's commentary today, Wednesday, that would actually change a little bit of the direction of the market. Other than that, a couple of things I'm watching. So Meta, they did announce their plan to launch the Twitter competitor. Don't know when that's coming on. Uh, I think it was The Verge. There was an article out about it. It's basically a text Instagram, but that's what their competitor is going to be. That's what they're going to be using to compete with Twitter. We'll see how that goes, but it's definitely coming, and it's coming very soon. Tesla's been on an absolute face ripper right now. And a lot of that's because one, there wasn't a ton of good news built priced into the stock. And there was in succession, number one, he got a new CEO for Twitter, Mary Barr. So he doesn't have that on his plate anymore. That was the first like, oh, okay, maybe there's something good priced into the stock, getting to be priced into the stock. Number two, when he first announced his partnership with Ford over Twitter Spaces, and then he did another Twitter Space with GM. Now they're sharing their NACS charging system. It's like North America Charging Standard, something like that. And that's going to give him, it could give him a lot of services revenue, if that makes sense. I don't know what the percentage is. I'm not going to go into a ton of detail there, but I will say, that's something that maybe the market will look at Tesla as, okay, there's a services component, almost like how Apple had that services component built in after the App Store went crazy, and they're like, oh, okay, this is real revenue. Before, Apple was just like, it was all about how many phones you sold, how many iPads, how many Macs did you sell, Tesla, how many cars did you sell. Eventually it could turn into what your services revenue look like, and that changes the story entirely. So just be careful if you're looking to short Tesla. It's one of those stocks that really, it just does what it does, and you have to kind of just go with the short-term price action. But we will look at maybe GM or possibly Ford. Those have had a really, a good week or so of moves. We'll see if they're going to be stalling out. I haven't looked at them actually at all today. And and a couple of things. I think there's a general rotation going on that we'll highlight also. There was that Bitcoin epic sell-off over the weekend. Just a ton of cryptos overall, like the entire market. This is pretty normal. I think we saw some of that happening. I think we mentioned it last week, but every time stuff like this happens, it ends up being like a buying opportunity. I will say, don't buy the first dip. It could go a lot lower. I think I threw out like a 1475 or something, like something wild on Ethereum, or like 20, I don't know, sub 25K. If you get that sub 25K on Bitcoin, it might be worth taking a look at, in my opinion. Let me just pull up the charts real quick. But I'm not in a rush to take a shot on this at all. I think yeah, it's definitely sub 25, 22 and change down to 20 on Bitcoin would be a nice little spot to snag something and put it away. If you have a ledger, that is, not in an exchange. But this could be in a couple waves. So maybe it recovers, maybe get some bounce trades. I just don't have a whole lot of hope right now that it's going to completely rebound. So wait for that to die down for sure. Other than that, B of A put out a release last week. It was like, hey, we're 20% above the bottom from the October lows. We're officially in a bull market. A lot of people took some shorts maybe on Friday, and I'm thinking, well, you don't really know, especially if B of A is releasing, oh, we're no longer in a bull market. Or we're no longer in a bear market. People might get excited about something like that. What I would say is, if you're new to that, just maybe take a minute. There are a lot of things that have run quite a bit, and when we get into actual components of the stock market, we're going to look at where people might actually be looking to step in, some specific sectors that would still be representative of decent value. Looks like Justin or Cannon's asking, how are you thinking Tesla's going to go in the coming weeks? Ooh, so Tesla's at a super critical point. We will look at Tesla. I'll take that as the first chart request. So I'm going to table that for now, and we're going to put it in the back once we finish this, and then we'll go through and take a look at some charts, and Tesla will be the first one just for you, Ben. All right, so the next thing we do here is we just a quick recap of what happened from an economic perspective last week. So there wasn't a ton of economic data last week. We did get ISM services numbers in. Those were slightly lower than consensus. Still around 50 is kind of like that neutral level. So anything over 50 is technically in a growth mode. So services PMI technically growing, but I mean very, very slightly. Factory orders, this is a little bit lower than expectations. So I want to keep an eye on some stuff like this. This is going to be, more tied to the consumer. And we do have retail sales coming out this week as well. So that could be something that would kick off the next move in the market since it's post FOMC. Mortgage rates, just notable, still way up over that like 6.5 level. That's crazy high. And jobless claims are one that I'm actually, what's up, more profits. Carlos is here. You guys rock. We got all these guys hopping in. Carlos, ready. All right. Jobless claims is something notable. So the prior month week, we had 233,000 jobless claims. Before, like a few months ago, if you look back at the data, we've been trending around 200,000 jobless claims a week. This number is starting to climb up just a little bit. And so last week we had 261,000. Biden's been, actually all of them have been saying, oh, we have such a strong job market, which more or less has been true, right? So if you think about it, remember the Fed has two primary like charges. That one is to keep employment, to have full employment, and to keep prices stable. So they've clearly failed by keeping prices stable, and their inflation thing is, that's shot. They've been doing good on their second, charge of keeping full employment. But if that starts to fall, that's where they would miss. And maybe it kind of, evens itself out a little bit. Because the truth of the matter is that really for inflation to come down, things like jobless claims need to be going up. And so, well, they're never going to say it. Fed might be liking that kind of a trend. And so that's why I'd say retail sales is another thing that I'm going to be looking at next Thursday, I believe is when we get it. But that's the stuff that will actually be able to bring inflation down. Otherwise, they could just stay higher for longer, just like they're saying. All right, quick look at earnings. So again, so far we've had about 28 of the Dow 30 components report. Only 2 have missed. So if there were people looking for this big earnings recession, it just didn't happen. There's only 2 more to go. Even if they both miss, it's going to be a really good quarter overall from earnings perspective. And this is one more thing of like, expectations were really low. So, I mean, they were probably too low. Now they're kind of adjusted, and we're sort of stabilizing out. Meta is flying off my screen right now. I don't know why. Maybe it's the Twitter thing. We'll see. So this is going to be one of those, will the market actually catch up? So if the market raises expectations for earnings next quarter a little bit too high, this is where we could have that little quick rally, maybe above 435, maybe like 438, something like that, hit a bit of a ceiling, and then start to back and fill. And honestly, that's what I'm expecting from big tech right now. It's just a lot of that back and fill. I don't think that they're going to be exploding to the upside. I don't think that they're going to be falling out of bed either. So that's why we're going to start focusing on what does a rotation look like and what sectors do we want to focus on. Cool. So quick thing this week, here's the highlights. Today, nothing burger, really nothing. Tomorrow we get CPI. That's a big number. Wednesday is the highlight of the week. That's going to be the day that, bombs go off and the market's going to be, it's just going to be crazy choppy. So be very careful if you're trading out there on Wednesday. I would say it's typically better to wait till after Powell's done speaking before you start thinking about actually trading anything, or at least towards the very end. There's going to be a couple points during his speech where you're going to see the market like shoot up and shoot down based on things that he says. Those are good things to take mental notes of. Is this something? Well, clearly, if he says something, the market makes an immediate knee-jerk reaction. Clearly, there's a reaction to whatever he said. So just the topic of what they're talking about, what he's talking about, is going to matter. Um, Thursday, retail sales. Friday, consumer sentiment. So these two things typically also do move markets. Retail sales, not so much, but this is one time where I would say maybe retail sales is going to start to matter a little bit more than it normally does, and it's probably because of that, uh, you know, jobless claim data. How healthy is the overall job market? And based on what J Powell's commentary is, man, this market is flying all over the place. I don't know what's going on. Google looks like it's dumpy. There's some really weird candles going on in the market. So apologies. It's very distracting. I might need to take that down for a second. Also, earnings. So if you guys don't know, I've been kind of like pounding the table on this Adobe. Adobe does report after the close on Thursday. I'm long this stock. I'm oversized on this stock, but I'm probably going to trim before the actual earnings event to right size myself. I just think, of the mega caps that you may have missed, Adobe's probably the one. At the time, it was like 370. That was an awesome buy. It's run like 25 something percent in the last week or so. So a bit much, I would say. Oracle also hitting an all-time high today. This is kind of like an older school. What do they do? It's like enterprise, like cost management, if you will. Some stuff. They do a lot of stuff, but big data enterprise stuff, mostly for like HR backend stuff. But these two companies, I think Oracle's a great company. It's not necessarily like S&P, but they do things. I would not buy Oracle for their cloud. It's not a thing for them really. But Adobe, I feel like that was just way. At the time, it was way underpriced. It's getting closer to a full value, but they have so much upside on Adobe that still I don't think is completely priced in. It's just, I think it's in a good spot, even up this high. It's had a huge move, but I think it still has a little bit more to go. HR finance stuff, yeah. HR finance, that's Oracle all day. So earnings is priced in. This is thing, for Adobe, is earnings priced in? I think that a lot of good earnings is priced in, but I think it's still in that scenario where when we look at the last quarter of earnings, right? I think it's going to be a massive beat. I think that they're priced better than they were 2 weeks ago, but are they fully priced in? No, I don't think so. So I do think it goes higher. That's just my sentiment. Take it for what you will. Not financial advice whatsoever. This is where I wanted to go. So one of the guys in the server actually over the weekend threw out one of these charts, and I thought it was really, I thought it was a good visual. And so what am I looking for in terms of rotation? Here's this last June. So month of June percent returns. Actually, energy looks like up 7.5%, but year to date, it's down 6.7%. This is an example of like, what does rotation look like every day? Some things that are down year to date that are starting to catch a little bit of a bid, and you'll see it every day, like a little bit here, a little bit there. Look at these wicks. This is craziness. I don't know what is going on. And the biggest sectors right now, energy and industrials. So industrials is going to be like, if there is a return to some growth, and here's my thought process, right? We've clearly had a rally on mega cap tech. I think that's good. It needs to be absorbed by the market. So I think it just sits right where it is. That's just my personal feeling. Maybe it grinds slightly higher, but I think the major trades have been made. Maybe they pull back, but I don't think they stay low. Just like this Google just dropped like whatever it was and then instantly recovered. There is one sector in energy, and specifically like services around energy, where those are still pretty low. They are also what led us out of the COVID lows. So when people start to think what led us out of the lows, maybe those are the things that come back to actually continue the move higher. So energy and industrials are more of what's called like a reshoring trade, if you will. So that's like bringing things back, let's make America great again type of stuff. So reshoring, if it's a boom, it's going to be a boom, a building boom. if you will. Home builders as a sector have actually had a huge move right off the lows, probably one of the bigger moves. I think that's mostly done. But then we start getting to what else is in a reshoring trade. Well, that's like building roads, things like that, fixing all your supply chain stuff. We'll see these Oracle or things like Oracle actually moving up. So what hasn't actually moved is something like a cat or a deer, those type of industrials that I'm actually looking at pretty significantly. Also, healthcare. So healthcare is pretty down. I would say it's down it's down 5.5, give or take percent. It's right in the middle here, slowly starting to catch a bid. You'll see things like Pfizer that are starting to move, not very much, but they're starting. That's that's this place that I want to keep an eye on, right? So if the tech sector gets really overheated, healthcare is one of those defensive sectors that people run to just for a little bit of safety. It's also really low right now. So it's a good one to watch. If there is a rotation into healthcare is going to be more of your quote unquote risk off rotation. So that's something to be noted. If there's a rotation into industrials, that's more of a, oh, Merck. Yeah. If there's a rotation in industrial, that's more of like your building boom, if you will. Another thing, we always talk about IWM. Personally, I'm not so sure that I would buy right now. I wouldn't buy IWM over something like a RSP or equal weight S&P. And I'm going to move RSP up on my priority list right now just because of the next phase that I think could move. It's going to be this high beta growth in IWM. That there's not a lot of that, right? There is some of that, but there's a lot of regional banks that have already had a huge move off the bottom. There's a lot of stuff that basically it's moved quite a bit already, and it has a lot of junk in IWM, quite frankly. The equal weight S&P is still the S&P 500. It's those little bit better quality companies, but if I want to see actual breadth widening, it's going to be more visible in the RSP or equal weight S&P ETF. So in general, this is the focus, right? So industrials, energy, keeping watch on healthcare. And if I want to take trades, I'm really looking more towards this high beta growth area, not so much that mega cap tech area. Cool. So I think I'm going to take this down for right now. We did a quick review of what happened last week. This is today. So here's the economic calendar for today. Tomorrow's CPI is coming out. Core inflation month over month, right? This is what could get a little funky. So if this comes in really high, then odds of hiking in July, so next month, are going to be significantly higher. I'm just going to pull this up. CBOE Fed Watch tool is what I use. Just Google CBOE Fed Watch. Super simple, free tool. And I'm going to click compare right now. So this is this week. Zoom in just a little bit for you guys. So right now, the market's currently pricing in 75.77% probability that there will be no rate hike. That's keeping us exactly where we are, and a 25% probability of a 25 basis point rate hike. I don't know about that, but when I move to next month and I click on July, you're going to watch this change a little bit. And this compare stuff, this is where, what was it a month ago, a week ago, or last Friday? So here it's 56% probability that we get a rate hike next month. And this is where things can kind of get a little funky. So it's not so much going to be about the actual hike that comes out or pause that comes out on Wednesday. It's going to be about the commentary of the next phase, if any, of possible rate hikes or pausing, right? So that's what it's going to be about. It's completely, you're going to get a move right when the rate decision is released, which is going to be probably about 30 minutes before the actual speech. That move is just kind of like arbitrary. Don't even worry about that one. The real move is somewhere in the middle to the end of his actual speech. That one will likely have legs that'll follow through, probably they typically extend like 36 hours, something like that. So I would say just wait. You'll see a big spike right away. Just ignore that. That doesn't matter. The only one that actually matters is towards the back half of his speech, the one that actually gets a little bit of legs, and definitely that carries through after his speech is done. So if you're really looking for something, wait till the whole speech is completely done. whatever that move looks like, that's going to extend at least through the following morning, if not day, and likely exhaust. That would be Thursday, likely exhaust Friday, depending on what retail sales looks like for that. So Wednesday we get, so this is CPI. CPI can change what the expectations are for tomorrow and July. That's why I wanted to bring that up. So if CPI comes in hot or cool, that's going to change the expectation for that July hike. And maybe if it's too cool, this probability is probably going to go up to like a 75 or something stupid before the speech has even happened. If I want to look at what the probability of a rate hike is by the end of the year, you need to go and click on January, not December. And right now, there's a 30% probability that there are no hikes priced in at all this year, and looks like about a 34% probability that there's one decrease priced in at some point this year. That's what the market's looking at. Looks like it could be. Looks like it wouldn't be until it's not even really there. It's not September. Look at this, September. Yeah, so 50% probability that by September we'll be at a quarter point higher than we are today. So it's about a 50-50 for July, 50-50 for September, about 40% for September. And then this is like, maybe they're thinking this is a cut. Okay, so there's a 40% probability of a cut in December, but only if we get an increase this month or next. That's it. That's what the market's pricing in right now. So CPI is going to matter. This is going to definitely make or break whatever that thesis is right now. So it's Monday. Take it with a grain of salt for sure. It's not something. This is a day that I don't put a whole lot of stock into in terms of direction, at least until the close or maybe early tomorrow morning. So that's CPI coming in some Tuesday. Then Wednesday we get PPI in the morning, which is pretty significant normally in its own right, but this specific Wednesday it's not going to be a major thing. And if you get any move, here's what I'd say: we've had a good run into this FOMC decision. I think it's pretty close to price to perfection. So I don't know that there's a whole lot the Fed could really say to slow down the market, to be completely fair. I'm going to remain a bull. I do think that we could pull back a little bit somewhere around like 429. So that's where I'm going to say 429, 428. If we get a shot there, that would be either, if I'm long now, that would be like my stop level. If I'm not, that's where I'd be looking to take a shot. And so conference actually starts 11:30. This is Pacific. So I think that's, what is that? 1:30, 2:30 Eastern, something like that. This is the day it's gonna make or break the week, and it's really gonna be, how does the market digest this move, this decision over the next 48 hours, right? So for the end of this week, I think we can easily say, hey, look, there's going to be a direction at least for a while, because we don't have a lot of economic data coming out for like 6 more weeks after this. So if there was one thing good to look forward to, I think that we can start looking at some longer dated trades after this week is over, and start to position for some actual swing trades, which it's been a little bit hard to find some good ones or anything that holds more than a few days. But after this week, I think, that's the good news. That's the icing on the cake for me. We can start looking at some longer dated swings coming very soon. So, retail sales, this is one right here. So retail sales month over month, consensus negative 1%, right? Prior comes in at 0.4. If this number is low for retail sales, I think this is going to be one where bad news is good news for the market. Retail sales coming down, that would give hope for inflation to drop as well overall. Same thing with jobless claims. So again, initial jobless claims 261. Just to show you what this looks like, this is the chart of jobless claims over, let's say, the last 1 year. So this is the curve. It's definitely going up. We've been standardized, right? Somewhere between 220 and about 200 for a while. We started having a few higher ones, and now this is the highest one we've had um, for a year. So this is what's on watch for me for sure right now. And retail sales would kind of like solidify that. Also, consumer sentiment Friday morning. So if you're one of those zero DTE traders on equity, Friday mornings, Friday afternoons, those are our days. Just be really careful. 30 minutes into the market, we do get consumer sentiment that does have tend to have a pretty big effect. All right, so let's do this. I said I would look at some charts. I'm gonna pull up Tesla. You guys have other charts that you want to take a look at also, go ahead and shoot them into the chat and I will pull them up. Carlos, is this a Merck request? I might. All right. So I'll take that as one as a request. So here's Tesla, man. Oh my God. So the weekly, and this is how I do it, right? It's always weekly first, maybe even higher. Weekly view, I want to measure from high to low right here. So this is my most recent swing low. This is January low. This is all-time high. We are sitting nearly a 50% retracement. I need to be really cautious of this. Also, right here, you can see this is this spot that we're sitting at. This is a pretty critical pivot. So can Tesla go higher? Yeah, you bet it can, because 618 to 65 right in here, this is what we call kind of like that golden pocket, if you will. And this would be for a bear, if you're a bear. For a bear, if you're looking for that golden zone to short, it's in between 300 and 250. So anywhere up here, it's probably going to get a little choppy. If we do crack this 255, I do think that it's very, very possible that we fill. There's a little gap up here. Here's your gap. So you have a very clean, what we call session gap right in here. This gap takes you to 265, give or take. 265. I'm gonna call this a session gap right here. So if you're still long, this is definitely where you want to get pretty cautious. It might even be like something that fills super fast and you like blink and it's gone. But check this out. Even if I extend, this is a huge pivot, right? So 265 right up here. This is the top of this trend, 264. Doesn't have to be a full complete fill, but something over 260. I could see that actually pressing up to the upside in short order. In the meantime, you have basically this little you have a couple of fair value gaps actually all the way down here, where this most recent run has kind of just blown completely through. So let's do this. I'm going to measure two things. If you're a day trader, I'm just looking at this, 1 week high low. That would take you to 238 on the short side. If you break structure, which we have not yet, breaking structure, by the way, it's going to be below 240. So 240, you could flush. You should flush down to 220 and change, quite frankly. There's a fair value gap right here on this guy that I'm sure a lot of people are eyeing right now. I take it right there, 227.24. So if I break structure down below 242, and I think this is to this question, right? How are you thinking Tesla's going to be going to be traded in the coming weeks? I don't know. I don't want to prognosticate too far out in the future. So all I'm going to do is I'm going to take this last couple days of trade. I'm going to look at this consolidation zone right now, essentially Friday's price action, and this is going to be my box, right? Once Tesla gets out of this box, then I can take a trade. If it takes a little bounce like this, after it breaks out and makes a new high above Friday's high, then I will go long on the next higher low, which should be somewhere around 250. And I could easily take that to like that 260 plus level to fill that upside gap. And then to the downside, if and only if it breaks down first, I want to see it break that 240 level first. And then I'm going to take it short on a retest of that same level after it breaks, going short on the next lower high, if that makes sense. So I'm going to wait for these levels to break first. If it breaks to the upside, I'm going to go long on the next higher low. If it breaks to the downside, I'm going to go short on the next lower high. Hopefully that makes sense. Volume will be prioritized also, but For right now, this is a huge move. I would not put it past Tesla to fake everybody and their mother out and stay exactly right there for the next 5 to 10 days. Like it would not be abnormal for Tesla to do that to all the traders and the premium buyers out there. Just saying, be very careful. Markets are either running or resting, and right now it's clearly resting. So let it rest for a little bit. Um, Other than that, yeah, that's about all I would really do. If you really wanted to go short, I can't really think about going this kind of short, but your short to the downside from a major swing would be 200. If it does get to 200 and you're not in Tesla long, then I would definitely start thinking about picking some up at that point. Just saying. But yeah, I don't see a lot of people holding shorts below 200 from this after this move. So that'd be your maximum downside target to me. Hopefully that helps. So that's that main chart. We started the weekly, pulled it back to the daily. I do have one more trend line here. So this one, this is going to be from these prior lows. We are peaking out right at the top of this prior uptrend. So again, this is just more confluence. I think it's time to rest for a little bit. Does it mean it pulls back? No, not really. But anywhere between that 215 here, we could do this. This is an important kind of chop zone. So this is a consolidation zone that Tesla's been in for a while, or Tesla has previously been stuck in. I can see that perfectly being a possible consolidation zone. Hopefully not that it's big, but it is what it is. That would be typical. Fill that upside gap even, and then stay in the zone. Potentially even kind of make it like that. But that's why, again, if you get that shot somewhere around 200 to enter back in or start nibbling on your longs, that's where I'd be looking at. Okay, cool. So that's Tesla, MRK. So biotech, MRK on the weekly. Oh God, this chart is just like, it's been a major mover. All right, so I have to take this major level here, sync that. That was the prior breakout. Still in consolidation right now. I'm just going to measure this really quick. Well, I guess I have to be measuring here. So $100 is a nice clean support on this guy, psychological level. I'm going to zoom in just a little bit. 200 days sitting about here. So, okay. So if I wanted to take a shot to see where it was going to bounce, 105.11. This is how I do it. I kind of pinpoint these prior wicks, these prior lows, if that makes sense. So it's this guy right here that I'm looking at. That little wick that was defended and created this support base right here. So clearly, if you get a shot in this area, that's kind of like your buy zone for now. Merck has made a big move. If I wanted to get even more granular, and let's say this is it. If this was it for this week, it's going to be at 108.50. I would say that 108.50 would be your higher low. This is probably why Carlos is saying look at Merck right now, because it could be right now. Let's see. Yeah, so this is this prior base, prior consolidation high. It could be right now. So yeah, if this is gonna go, it's still above its 200-day. The only thing I'd say is like you'd have to say this is a big wide stop. So I don't know if it's in active motion tomorrow above this to the upside. Yeah, I could trade this, and you could trade this probably to this 112 upside fair value gap way up here, maybe 110, just to keep it even. 112, yeah. But if it was closer to this 200-day moving average, that would be more ideal. For right now, this could fall out just a little bit more. We did see Pfizer moving today. Oh, yeah. So Pfizer had to move through its 50-day. That's that blue line right now. Kind of hit this prior upside. So if we get an extension on Pfizer over 40.22, that's a nice breakout area. Over 40.22 on Pfizer, we should get to fill this 41. Doesn't sound like a lot, but these contracts are super cheap. could see this like 41 plus fair value gap fill up here. And this purple line is its 200 week moving average. So this is a good constructive kind of like reversal setup. It hasn't made a new high above this yet. I would just say if it does, I would like it, and I would like it more long somewhere around like 39 and change. And I would probably take this level right here, which is going to line up very likely to your 50-day moving average, and potentially this little fair value gap from this morning. That was, God, this was 39 this morning. It's already moved $1. It's a big move for Pfizer in a day. It's a big, big move. Tesla, insane. Do I have any Netflix? I do have Netflix positions. So I have Netflix equity. I actually had some Netflix calls on Friday that I couldn't really watch anymore, and I rolled up and out to this week's. They're like they're profit rolls for me, so it's not really a big thing. Here's what I was looking at on Netflix, and I think this is a big deal. So I'm going to take these fibs down for a second, but just so you note them, we just ran into this 50% fib, or just running into this 50% fib retracement on Netflix right now. So it's a little bit tough to trade. It's in a very bouncy zone. That purple line is a 200 week moving average. So if it pulls back somewhere around there, yeah, I would be looking for a real position. Right now, it's not a real position. It's a real equity position, but it's not a real options position, just because it was just with a little bit of my profits I rolled. I don't even know what it is right now. I'm not looking that close. But here was the thing about Netflix and the spot that it's in. Well, yeah, it's at a 50% retracement, but I want to zoom in to this spot right here. And so what I have on the right-hand side of my screen is what's called a visible range volume profile, meaning what's visible on this screen is what the profile is going to be shown over here. And there is a couple spots. So one in here, I have a big gap. We know that this volume gap here is an earnings gap. So I'm not really thinking about like, oh, will it fill this gap? Not so much, because that's more of a fundamental event. If it was a technical gap, sure, but it's not. This, on the other hand, is a technical gap. And so when I look at this spot here, I do see a little bit. So here's what I'm going to do. I'm going to zoom in, zoom in, zoom in. And so even up here, I see more buying than selling. So this is going to be an upside target. There are still, what this tells me is that there's clearly people stuck in Netflix right now up here. So there's a potential that it does get pushed all the way up to that level. But at that level, that's 450, give or take. I want to be super cautious of holding anything. And this is not an options thing. Yeah, so I'm just moving this so I only see the selling action. So this is still in here. Yeah, they didn't really get a chance to sell out there, and they all sold right about here on that kind of volume wick right there. So I'm going to say this is going to be my level 4028. So if Netflix gets up to 4028, and what I'm looking here is how fast does it move in this? I'll give it a little extra. How fast does it move from 4028, 4030 to 4050? This was a single day move. That could be a big knee jerk reaction. So anything higher over 4025, I'm really interested in Netflix. This was the big move. And like this day, what did it do? It did a $40. How much is that? That is a lot. $35 move in a single session. So I need to know that Netflix above 4025 is really, really on watch for an upside press. 4030, you're pretty much go. But in this level, I have this upside target. I'm gonna pull this back just a little bit, 457, and that's gonna be my short-term target on Netflix. I think it's gonna stay up there. There's like a lot of good, they're in the spot where, okay, they're doing the password crackdowns, but at the same time, they're still holding their revenue. or growing the revenue, which is a little bit odd, but it is what it is. So I think there's still upside. That's my short term upside on Netflix for 450. I'm going to say 455. So on a $400 stock, if you got it at 400 even, that's like 10%. That's not bad at all. All right. All right. Kanan's one more Visa. All right. We'll do this one and then I'm going to call it for the day and I'll see you guys out there. So Visa, this is the consumer. I think that the consumer in general has been beaten up quite a bit. I will say that. I think it was MasterCard today that some of the guys took a trade on. I'm going to just look at Visa specifically. Let me pull up an option chain too, because I need to prioritize liquidity. So Visa, I don't know if you know what I'm about here, but there's 16,000 volume on the 2:30 calls for this Friday. Did you know that, Keenan? I don't know if you knew that. So there are 16,000 calls traded today on the 2:30 strike for this Friday. If I look at time and sales right now, I will tell you that it looks like they're selling them. It really looks like they're selling them. So, yeah, I'm pretty positive they're selling them. Forget about your flow tools and stuff like that. I'm just saying that's what it looks like. Yeah, it's about even between the bid and the ask, but specifically that strike looks like the 220s for next week and the 230s for this week are mostly sold executions. Yeah. No, I don't think he did, dude. But that's cool. Yeah, this morning it looked good. Here's what you ran into. You ran into a fair value gap. That's just what it is. So if you aren't familiar with what these are, like you could look at smart money concepts, stuff like that. But fair value gaps are just kind of like liquidity zones. Right now, what's true for sure is that if you're below this 230, 223.50 level right here, I'm just going to call this a break of structure. You've made a new low. Right now, you have made a new low. You have yet to make a new high. So unless it's over 230 clean, right? This would be your prior high here. So I'm going to call this a break of structure, meaning unless it's trading above 230, you're not actually in an uptrend yet. So I would be cautious on this one. It looks okay. It looks like it's hit this. Sorry, I'm looking at the weekly right down here. I'm actually more into this one. This spot on the weekly, laying up these little wicks down here. If you get a shot down here, I think these look better. And then your stop would actually be way over here. So in this little zone is kind of like your value area to me. To take some shots, I want to be cautious of this. That would be 204, which looks like it's gonna hit there. This chart looks very choppy, man. No earnings on deck. So at least that's clear. And then if I look at the daily, okay, you can kind of do that same. I can see this on the daily. Just because you have this same kind of order block, if you will, that you just tagged and defended. So this is constructive. I think the trade is done though for now. Your target would have been, I mean, it looks like it hit that target. So that move, this type of move, that could be all she wrote. So for now, I would just take that for what it is. And then tomorrow, that's when it's really going to come into play. So right now, this is where Visa is trading. This gray line, which you probably cannot see. Let me see if I can zoom in. This little gray line is a 20-day moving average. This blue line is a 50-day moving average. So our fair value gap was here. Unless it's trading above that 226.43, I would be very cautious of this kind of dumpster firing right into my face. I do see the gap. So what I would say is if it's above 266.50, you're going to fill this gap. High probability that you're going to fill this gap. And you're also going to run into this 50-day moving average, which has really not done well once, twice from the downside, right? I would rather take this long above if it's coming into a moving average from the upside. I like these kind of setups, right? Where it's hitting a major institutional moving average from the top and bouncing off the top of it rather than bouncing off the bottom of it. This is a higher probability that it's going to be going down. Moving averages are not expanding either. They're contracting here. So this tells me that this is going to be in a bit of a pause unless this is up over these levels, then you have this next fair value gap, 232. But either you're trading it super short term like those option traders, or look at this, where you're going a lot further out. This is a good example of one I would wait to position till post FOMC, and then you could get a really good view on it. All right, I'm going to do one now that I'm in. So cat, I'm going long. So this is back to that theory, like, okay, if we have that building boom, let's say this would be one that I want to trade for. Right now, I just have a trade on really just targeting this clean gap right here, session gap up to 240. Major change of character is over this 233.83, which we are making new highs, and then holding that same level right here. So anything higher, I think this looks like it's building, getting ready. It's tried to this once already. I think it's gonna try it, but it might be fast and furious. So something like this, I'm really looking at, and then I want to see confluence too on XLI, the industry. So is it the same setup? Yes, it is, right? So we're breaking here. This was a daily. We're running into this. If the industry as a whole can get out of its own way and actually start getting over this, then similar kind of move I'd be expecting on the industrial sector. This is just this is like 2-year consolidation, by the way. So it might not happen right away. There are a ton of charts just like this. Boeing, is Boeing happening? Oh my God, it's happening. Damn it. So Boeing is happening. This is another example of a multi-year consolidation, right? So this is 2 years almost. Or how long is that? Half a year, 6 months, 160 days of consolidation. Today, did anybody take Boeing today? Because what the hell? Today is the first day it's trading out of range right now. So here's that range. Here's that prior high. This is a big trade. I'm not messing around. Well over its 200 week moving average, 50-day, 20-day down here. This is not a small trade. If this goes, which it's highly likely to at this point, now that it's already breaking. So it may take a while to play out though. So basically I'm going to do this. I'm going to measure it. And most people hate it when I do this because it's a little crazy to do. Admittedly, I'm going to measure this consolidation area, and then I'm going to take it right here, duplicate it, and set it right on top. And so that would be 240 sometime between now and November, legitimately. That's a measured move to the upside on Boeing. It is what it is. I'd probably say it skips 240 and maybe hits some of these fair value gaps. You have a clean session gap. Yeah, this is a bigger trade that's playing out. This is one where I would position longer term contracts, especially knowing, by the way, that Boeing's volatility before it really breaks this zone with strength is going to be very, very low. So yesterday, Friday, I think it was last week, it was even lower. So right now it's the 6th percentile of IV. I think I was looking at this Thursday or Friday. It was the first one, like 1 percentile. So it's still really low. Here's volatility. It is cranking right now. So I got to get into this sooner than later if I want to go anything further dated. what I'd say is when something is this low and you're looking at longer dated contracts, volatility is way big. It's like a bigger factor than the price action is, believe it or not. Volatility is more important than the price of anything longer than 6 months on contracts. If you look at something called Vega on your options, that's likely going to be higher than what Delta is, which tells you, okay, volatility is a bigger factor. Knowing that volatility is this subdued on something like Boeing, that gives me the opportunity to say I have a clean edge on longer data contracts just from a contango, not so contango is something where like if typically longer data contracts are lower volatility, and I would be looking for that kind of reversion for those longer data contracts once this move starts really going to increase in IV. So that knowing if I buy low vol now and I can sell in a high vol scenario, that's an additional edge on top of price action. All right, guys. I think we're way over. Actually, man, I'm going to give you one more. Funny, I'm going to have to take this one, your DUSL. I'm not sure. I'm not familiar with that one, actually. But I will just say this one, AMD, don't sleep on it. I know that people think that semis look extended. Here's today's move, gap clean. This is actually clean enough for me. Here are gap rules, right? If the gap goes and half gap fills, it's a high probability of continuing the following day. Here's the closing price. Here's the high. Half gap is at 127. This is above yesterday's or Friday's high. High probability that this continues to the upside. Free trade, right? All right, cool. What's the next one? You wanted to look at DUSL, industrial bulls. Oh, I didn't know this. Ooh, yeah, no, I won't trade this. When a chart looks like this, that means there's not enough volume. I'll see you later. I believe that there's another one, maybe not Direction, but like a pro shares or something like that. But all right, guys, appreciate it. AMD looks higher. Add some 135 calls for Friday. Adios. Appreciate you guys. Follow us on Twitter at Paper Gains Inc. By the way, I'm gonna tweet out our giveaway when we have 10K followers, and yeah, it'll be a good one. I'm giving away like $2,000 worth of subs and stuff, so it's like a full year free Paper Gains. Never done that before. A quarter free and a month free to 3 people. We'll see you out there. Adios.